All right, let's jump into things. Where we at? 9:35. Gee. So we are obviously into that sort of winter timetable at the moment and that. So ours sort of clicked forward over the weekend for Australia, and that's it now because the last month has been a little bit choppy with that because everybody sort of comes onto their daylight savings at a different time. So it's just like you got to keep sort of updating these things as to sort of when the volume's coming in. Like it's obviously the same actual time, but because the US changes, then I think 2 weeks later UK changes, then 1 week later Australia changes. It gets a bit sort of choppy in grey areas. So hold on, wait, what time's the volume coming in? Anyway, so we got that sort of sorted now. But look, the result of it all, it comes in earlier. You know what I mean? Up a bit earlier, get into it a bit earlier. That's fine. But of course, the plus side, I guess, is that when that data comes out, particularly with the US, it's coming out at like 11:30, not at 12:30 at night. So there are some sort of silver linings to that. But anyway, look, 9:30, so obviously a little bit earlier than previously, but that's okay because we sort of get in here before the sort of volume starts to pop in, and where are we at? It's the 8th of April, so just getting stuck into the month, 1 week down. Excuse me. So look, I'll start off with gold because this thing has been such a trade, like from the tops over here. Look, I've done a bunch of videos of this, but my top call on this one, I made a video specifically for gold going underneath, potential for it to go underneath 2,900 when we were at 31, 46, 31.56. So it was up here in these wicks, basically. I did a great sort of breakdown on the structure and the flows sort of coming up into this area that was very similar to the sort of flows and sort of price structure that we saw coming through this area here before we saw this big sort of correction. I've been calling this top. I was a little bit early with the top sort of the call, like when I suppose a little bit early. I was in through this sort of period here for a lot of the shorts, but I was saying that. So basically, look, referencing the last couple of times that it had been through 1,000, well, last couple of times. First time it went through 1,000, first time it went through 2,000. Both of these periods led to 10 and 12 percent respectively corrections. And as you can see at the moment, we are on our way down towards 7% at the moment. Look, I do think it's potentially got there's a couple of things lining up, which I'll unpack in a second, to sort of say that this thing could still go under 2,900, which is what the call was from up over here, which at the time seemed crazy. And I even admittedly sort of felt a little bit like, oh my God, am I going to sound like like a moron putting this out? But like I was saying to a mate, it doesn't really matter because that's the analysis. It's based in some actual evidence. And it proved to be correct. So that's the thing. You got to put yourself out there with the analysis and that. And as long as you've got some sort of actual sort of justification for these sort of things, and you can talk it out, verbalize it, make it actionable, then do it. In my opinion. But let's get rid of some of these to clean this stuff up. Um, the top over here was that big three drive as well. So we had negative divergence, three drive, top of this breakaway channel, and the main channel overthrow. So there was a couple of things lining up to sort of say that this thing was due for a little bit of a sort of cooling. And obviously, as we have, bang, 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 we've come down. A couple little flare-ups, shooting down all the way. But it is slowly grinding its way down there. Now, this last little push up through here, if we sort of looked at, let's make this actually just make it a solid line. If you look at this in the sense of it being kind of a flag, well, not really a flag, but like this move here being equal to the next move coming down here, going from the bounce highs up at 30.50 or 30.57, whatever, and in change. That measured move obviously also brings you down to sub 29. We've got potential for this head and shoulders, the neck of this to the head, not including the wicks on the daily. That also gives you that sort of move down into the 2800s. Now, over the weekend, I did sort of call this sort of like head and shoulders move, and it is but it isn't. Like, it did actually prove very well to sort of sell into, sorry. As you can see, it is lining up with what would have been those right shoulders over here. But a true head and shoulders, the shoulders should almost sort of be matching in sort of terms of duration. So this obviously sort of going, what's this? 6 days there, you could have almost expected this to be going and sort of consolidating through here to sort of come down there. So not fully sold on the idea of it being the head and shoulders. Yes, the levels work, but I think they're trying to get out of this thing a bit quicker than trying to sort of give it some sort of form and structure, which if you sort of unpack that kind of thing means that you could be coming down faster, quicker. Because obviously, when you see these head and shoulders, what they're doing is they're sort of building up sort of stops underneath or stops above here, whatever, and then they'll sort of move it down. They use that liquidity to sort of drive it. If the liquidity's already there because so many people are in profit, and basically, my sort of feeling with this is so many people are getting margin calls with the indexes and that, and the indices getting absolutely smashed. Look, they're taking the capital out. You got to remember this thing is just still in ultra bullish area. We just passed through the 23%, 23% retracement of this year alone, not to mention all of last year. So, this thing has got a lot of profit sitting on the table because not everybody's a trader in and out, in and out. People buy, they hold, they move it up. So, look, I think that this is definitely lining up to sort of come down sort of like sub 2,900. Particularly if we take out this wick. So we saw a little bit of a dip down yesterday, 55, when that 70 got taken out. Obviously, found little buys into the end of the session. These alerts, I'll tell you. Let's pull this down here. No, okay, 2 seconds, we will be back. Trying a different chart. That one seemed to work a little bit better. No? Okay, quite frustrating. Let's reset these. This is probably my internet sort of dying again. Jesus. Okay, seems to maybe we've got it working. Look, under 54. Let's just do this, and let's just label it properly. Taking out Monday wick lows. Well, that's Monday, that's Tuesday, that's who cares, whatever. It's a continuation, let's get these off here, keep it relatively clean. So yeah, look, we've seen, look, it's the same sort of structure that we say every time. You move down, you find support. You move up, you find resistance. Resistance at previous support areas. It tackles the lows, breaks through. Boom. Cycle starts again. Find support, resistance. Resistance, where was it? Previous support. Tackles the lows. This one came very quick. Support, resistance, tackling the lows. So this is where we're at the moment. So the point is, if we take out these lows, the cycle goes again. And you go, where do you go down to? Well, I reckon around the 20s is probably a good, decent level. Up to the 70s. Oh, Jesus, and the internet's died again. Of course it does. Oops. Up to the 70s, and then tackle. That's the course of action that we're kind of potentially looking as it grinds its way down. These things don't, I know it's as cliche as anything to sort of say they don't move in a straight line, but that is how the structure works. So we just got to sort of think, okay, where are they going to find bounces? And you can see, go back to these previous areas. This purple line we've got marked through here, this was a support, resistance, 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 resistance. You're going to see a reaction around the sort of 20s level. So should it sort of break through the lows, through sort of 66, I could see it moving down into the 20s. Probably find a little bit of support, some profit taking around this area here, and then a move back up to the 70s. And then again, the cycle again, you come to sort of tackle these lows, you break those lows, that's when you look for your sub 2,900. So that's how I'm going to approach this. Obviously, it needs to be actionable underneath 55. So that's where we'll be sort of looking for some sort of confirmation of the move through there. Look, it did sort of attempt to sort of break down, like sort of obviously lower. Excuse me, it's a bit hard because this is the last candle of the session. They've obviously brought it back up a little bit. We haven't had volume in for Asia at the moment. I was watching something last night and they were saying that, look, Asia is still keen on buying. We had that headline, was it yesterday? I can't remember. These things are coming with so many headlines at the moment. Maybe it was on Friday. No, it was yesterday. That China has been buying for a fifth month in a row. These headlines, who knows? I mean, like, you can't always sort of believe what the hell they're saying. And we saw this last night as well, actually, a very good example of it with I'll find it just one second. Here we go. So the original one was this that the White House says 90-day pause in tariffs. It was like, but excluding um, China or something from this, apparently. But then, of course, the White House comes out after and they say, no, you know what, that's all fake news. Oh, fake news. Boom. But look, the thing is, the market reacts off this stuff. And if you get down into a low time frame, you can have a look at how it did actually react at the time. And it was just around this period here. We're at 3,000. Put it onto, like, this is how quickly the move is. You need to go down very low time frames to be able to sort of see it. But we're around this period here, 3,000. Tariff news comes out, whoop, and look at this. It moves up 40. Was it $30? $40? Where was it? 83? No, it must have been around this period here. Moved up from 3,000 up to 30. I actually thought it got a bit higher than that, up to sort of, no, 50s early 3,000. Anyway, whatever. Point is, it flies up and then bang, comes out. Oh, it's fake news. Jules. And this was the thing I was saying. I was like, I shorted into this part here, which is actually a great trade. But yeah, I said to a mate, sort of like, if this thing comes back down and goes through 3,000, well, it just yet again confirms that we know that this is all garbage bullshit. Because, this is the thing. So down at 3,000, up to 3,030, they just use that, exit some positions, and then bang, slam. And underneath 3,000, you can see that's where it really started to confirm and sort of pick up speed. So we're starting to move up, as you can see, potential for a little bit of a sort of rollover here. So let's put this up here and say that this is low time frame, of course, just to give us a potential where we could see this. If people were trading in lower time frames, where would they be putting their measured moves? That's another one that's sort of giving us a move down, sub 29. So look, I think underneath 55 is certainly where we're going to see things move. Should we see Asia see some buying with gold? Should they actually grind this back up? Or maybe a retest, uh, uh, maybe a retest of this 3,015 level. I don't see it coming up here, but I think if you do get a move up into here, I'll probably look to short some more. Because obviously this is a higher time frame zone. They were trying to hold it, and then obviously just unable to at that point. So we just have a bit of data coming up. I'm not quite sure what we've got at the moment. Yeah, it's going to be some sort of Japanese data, so nothing too exciting there. But yeah, so look, I think certainly some more downside to come with metals. I think a lot of this stuff that's being sold off, equity markets, the metals, unfortunately Aussie as well, I don't think it's done. I don't think we're going to see the V-shaped recovery. Stupid internet. I don't think we're going to see the V-shaped recovery that everybody wants. Just having an alert go off. I think a lot of people are going to sort of be into these things. They're programmed to buy the dips. They're programmed to say, "Hey, look, here we go, we've got it." But I think sort of it's going to humble those people to sort of put it nice. Nice. I think it's going to sort of like people are going to buy the dips. That's going to add to this sort of bunch of stops underneath the lows, and then we're going to ratchet down another level. So I mean, again, I don't sort of cover this typically, but I have a fair bit more recently because we are seeing these things move. Oh, the metals just got a little pop there, was it? So just got to manage a position. But yeah, so I mean, look, this is the sort of ES trade, sort of US 500. I mean, this completely overshot. Actually came down and found support. Well, basically at the top of this tiny little range from back over here. It's a very obscure level for people to sort of say, hey, look, like this is the full bottom for everything. yes, it's been oversold and smashed down, and the bounces have been great, and all this kind of sort of stuff. And it could see a little bit more of a push up in this move. But I think that this is potentially just going to be sort of up here, put some stops down under here, and then you're just going to see this move back down through here to find a new low, and then maybe you see a move, or maybe you see this thing sort of oops, come down even lower. Come down to say the 78 and then sort of move. So with these sort of things, I'm not rushing into it. The bounce was good, the bounce was solid, and that was the trade. If you watch the weekend sort of analysis, that's what I was saying, that these things are going to happen. Like the sell downs don't happen forever, but it doesn't mean that sort of, it's all going to be a V shape. I think too many people are just in the belief that, oh, V shape will come and then we'll be okay. I don't think that's the case. I think the market is really sort of telling us that they're here to wipe a few people out, to reset a few things, and there's a lot of people that just don't know how to trade two ways, and so they just sort of hold, and they'll either get wiped out or they'll just go through a period of not making anything, which obviously if you're a trader you can't really do or you can't afford to do. You're there to trade and there to make money. Anyway, look, point is, I don't think we're at the bottom with a lot of these things, and I think they're all going to kind of vaguely sort of follow suit with each other. Look, let's flip along. We've got silver. Silver, this was such an awesome trade, this one here. This wedge with the negative divergence, it absolutely melted down. I got out around the 31 at the price target, and look, I was happy with that. Obviously, sort of, it dropped another, what, nearly $3 or so from that. But as per the weekend, these were the trades. These are the ones that we called out. Well, I called out. I said, look, if you come down into this zone, which you did, down in 28, you actually overshot it a little bit, 28.30s, and then you're going to be looking for this to bounce up. Like, remember, these are levels, time, sort of price levels, not time levels with stuff. Move down here and then here. So we've come down. The move is going to come up like this, which is this little move just here like that. And then we're going to sort of see some resistance at previous supports, and the market's going to sell into it. And you get this leg, and this is where we are right now. So look, again, this thing has been absolutely beaten and battered. It actually held up better than gold did. As you can see, they sort of tried to sell it down, and it's finding itself a little zone just around here where it really wants to hold. I actually thought when we sort of broke through this area last night that maybe we would have sort of got down, and that would have been the move back down, at least for a body fill. So back down sort of low 29s. I still think that's a possibility. I don't think, all of a sudden, hey, it's all okay. Should you sort of get back up above 31? Okay, well, you could look up to 32 even potentially through there and see a nice little move up. But I think with these sort of rising trends and things like this, you need to honor them when they're broken. I think the thing is, obviously, we saw this get absolutely smashed, but things can fake out, but they need to get back in, and they need to get back in quick, not get out, close multiple outside, consolidate outside. The trend is broken, the trend is gone. It took out the yearly lows. Within 2 days, this thing just went and absolutely melted down through there. So again, I just don't think that you're going to see something like, you've broken your yearly trend, you've taken out the yearly lows. I just don't see this now sort of going whoop back up like this, like a V shape. Because I think there's a lot of people that sort of like maybe didn't sell here, bought here, didn't sell here. If these people get a chance to get out, they're going to take it. And when the price moves up, they're going to do this, and they're going to sell it back down. So that really puts 32 as a cap. So if you're stuck long above 32, I'm sorry, but I think you're kind of, stuck holding for a little while, or you're going to be sort of ripping out taking a bit of a loss at some stage. Look, it doesn't mean that it can't get up to this level. Certainly past 31, I would look for 32. 32 could actually sort of provide a pretty decent short position. Because if you get these out of the way, if you sort of get above 31 and you look to 32, well, you've got a horizontal through here. You've got 618. Oh, mate, it's actually not technically 618. Well, it is 618 retracement of this move down, going just straight from that sell down, not from the actual full high. I mean, look, even if you put it from the full high, within a couple of cents of it. But the point is, 618 retracement, horizontal. That'll, depending when you get to it as well, that'll be around the area where you're testing the underside of this rising support. So to me, if you get above 31, 32 is where you target, but you target it for sells, for shorts, and you target for here to sort of come back down over here. This is provided this thing breaks up and then moves back and grinds up through here, which, you know what, is a possibility. You know, as I said, with 6-1 retracement, we know that this is a strong level. It's doable. It's definitely doable. You've seen such a big move down here. People are taking profits. Why wouldn't you? You know what I mean? This came so hard and fast. You know, you make sort of, you know, a year's gains in 2 sessions, years worth of gains in 2 sessions. Like, you know, of course you're going to take some profit. Closing those shorts is going to drive price up a little bit. But as I said, I think ultimately you're going to be met with people that were long who want to get out. Remember, if you got it wrong and you've got the option to get out for flat, particularly when you're wrong in a big way like this, yeah, people are going to take it because it's much better to get out for flat or close to flat, small loss, than it is to sort of yeah, think that this is the shakeout that's going to take you to $40 or whatever. Look, in time it probably will, but you need to honor the fact that this trend has broken. I mean, you look at other previous sort of times that these trends have. It's a bit messy to sort of find something right now, but anyway, point being is, yeah, I think any sort of movement up is just going to be sold into. I think sort of a break underneath 29, what was those lows down here underneath 29.50. I think that sort of sees you look for a continuation down to the downside there, and I wouldn't be surprised if this gets into the 27s. You know, I still, as I said, I still think a lot of these things have some humbling to do, and some people to sort of show how the market really works. All right, DXY. It's taken a bit of a back seat, like, because it's unless you're trading the euro, it doesn't really seem to be doing a well. I mean, it is doing a bit. It's back testing. But it is sort of slowly grinding up, and that was what I was saying over the weekend, that, you know, we had this previous level here where we had the buys, and, you know, that provided a good little area where the market said, yep, that's us, bang, we sold down. So we saw this move. Buyers stepped in, sorry, sellers sort of took it, sold it back down. Buyers stepped in, and they're pushing back up here. So obvious point at the moment is this little part that we're looking for here, which is closing the gap. So I would say that potentially these sort of things, you know, given another push up over here, we could see Aussie come down a little bit more. I wouldn't be surprised if you do actually see this thing sell down a bit more substantially from here. It could be a point where this is a whole shakeout. As I said, you know, again, you go above 104, things are going to break because, you know, our job's to pick out where are the flows going. And for so long, well, so long all the way through here, they have not been going into US dollar. This was an area we came down, we hit our price target. I mean, we've been marking this, I've been marking this out since January. You know, came there, worked out perfectly, cleared the book, bang. Now it moves back up. Doesn't mean that it's going to necessarily go to the moon up here, but it does mean that you could see this potentially gear up a little bit more, particularly with all this sort of tariff crap going on at the moment. You know, I wouldn't be surprised, you know, if this thing, you know, doesn't break, certainly doesn't break down further till that stuff's resolved. So this means that you potentially look for a bigger consolidation through this area, and try and trade this kind of thing. I mean, look, this could, again, anything can happen. This could just blow out the top side here, but close the gap, call that your sort of resistance, see a bit more of a sustained move down, look for some midway sort of support areas. But I think that this is kind of what's going to give you your direction. If you break above and keep moving up here, well, technically you've got to get above 104.70. But if you sort of get back up even into this range and bounce along here, that's looking very bullish in the sense that you may want to break a little bit higher. So as I said, I don't think these moves are quite done quite yet, but we'll have to sort of see how things tick off. I mean, a little bit of a sell down on open here, but as I said, I wouldn't be surprised if this goes up to try and sort of close this gap, and then we see a little bit more selling to come down there. Move along, so we got gold, silver, Aussie, and this is my point with it. Aussie, Aussie actually traded pretty well yesterday, I have to admit. Um, I was on the buy side of this, so I did catch these spikes, which was quite good actually, because obviously these things have been absolutely hammered down. But this little move here, I got off my ones. I think it was at 23. And as you can see, hit 26 on the high, had two positions there, one at 23, and then the other one didn't fill because I think the price target was up over here. And so I saw it, I'm like, oh, and then a second later, look, it had a double dip. So this second wick here came up here, and I got out at 10. So where is it? So here. So I got out 10 here. Where is it? Like this one here, top of the wick. Got out at 23, the second position, and this thing just got bang. Absolutely crunched afterwards. Dropped another 3%, another 180 points from that point. I caught the little buys through this area here as well. But at the moment, I'm just going to hold fire because I think, as I said, I think this has got some. I don't necessarily think we're going to maybe see new lows immediately. Certainly, if DXY squeezes much, much higher, I think we could. But I think there's sort of like some opportunities around here. I think we've sort of shown that, buyers are happy to be sort of sitting in this area through here. So I think any sort of move back into that sort of like, 50s to 60s, 59.50, 59.60s area, I think that could be a little bit of a bounce trade opportunity. As I said, I think sort of a little bit of a strengthening, close that gap on DXY. If Aussie decides to come down, close the gap on DXY, move back up with Aussie out of that support area with that sort of cross chart confluence. That's probably sort of what I'd be looking to do with Aussie at the moment. But certainly anything you buy, you need to get out of when you've got the opportunity and you've got some profit because, it's again, these things aren't going to do V shapes. In time, it'll come back over here. That's fine. But, you got to understand the possibility that it could come down here first. So, as it's just jumping around, and particularly sort of this, to unpack that news a little bit, the way I see these things, apart from the fact that it was garbage, as I keep saying, I didn't think there was going to be, and I still don't think there's going to be some V-shaped recovery. So any kind of headline that comes out like this, like, oh, geez, wow, we're backpedaling 2 days later, the market goes bang, crazy for it. Well, you sell into it. Well, I took profit in this one, in this case. But the point is that, if it's not going to be a V-shape, any headline's most likely going to be garbage. That's fine. What we can take away from it, though, is that how the market will react when that does happen. And it will happen eventually. It may take a couple of weeks, may take a couple of months, but eventually it will happen. They'll come to some sort of resolution. Maybe you'll see some, stuffing around in bad times in between. Hence the idea is that you could come down over here. But when they do come to some sort of resolution, there's a good chance that these things rocket. So, it gives you a bit of an insight as to how the market wants to react should that data come out. That's how I take it. And, if we see the market sort of just buy it like crazy, same with the equity markets as well, buy it like crazy because, let's have a look at gold here, dipped to 79. Because the equity markets sort of rocket up because, hey, the trade tariff deals are being made and yada yada. Look, that's what you look for. And there's no point sort of necessarily sort of being all in thinking that this thing's going to V-shape overnight when it could actually carry on for months. So let's see what they have to say first. But as I said, I think short-term trades are definitely the way to go at the moment. The big moves have been done. You may see another big move coming down. But I think any sort of move back up, as you can see with this stuff, market just loves to sort of sell into it. If we push up above, what's it, 66? Yeah, 60 is a thing. Yeah, you might get a little bit of a trade through here, but again, look at where the market's priced it previously. You're moving up 28. The volatility this week, or the last couple of sessions, has just been insane though. Like for Aussie to be moving like this much through like, if you put this onto like, this is on 15-minute candles, But, these things moving like sort of, like GJ, like, it's moving 20, 30 points in a couple of minutes. So, yeah, so if you see sort of 30 points, like as I say, I got to feel, I can't remember, so maybe around here, so whatever, we'll through one of these pushes up here. Um, look away, just flicking through a couple of things, doing a couple of bits of speed, look back, 25 points, bang, take it. You know what I mean? So, yeah, certainly crazy, crazy sort of price action at the moment. All right, flip along. So copper, copper, as I said over the weekend, look, these things won't last. It came down, really sort of held this sort of support through here. Have a look at a decent time frame, right on the trends from way back. This was when we had that big breakout, so March last year, before just before I went to Japan actually. And it came all the way down here. It's held this sort of low. It's this horizontal. So there's a confluence here. It's actually a number of confluences if you look at this. So we got top side of this triangle. We've got trend from 22, and you've got horizontal from, September. So there's a confluence, three-way confluence to get it to bounce from here, and it did. The market shot it back up, and this is what I was saying over the weekend. These moves don't last forever. Like, people panic, a lot of people got wiped out. I mean, this capitulation top, I covered this as it happened, was very much the time, and as you can see here, 25% from 26th of March. So, give or take 2 weeks, 25%. That's insane. So look, we got a pretty good sort of reason why it bounced here. The bounce was quite strong. It was about 10%, as you can see from the lows. Which, as I keep saying, these bounce trades, when you've sort of come down so far, it doesn't have to recover, but the bounces, 4,000 points, they provide pretty decent returns just because the initial move has been so strong. It's still incredibly bearish, but you still got a 10% from the lows. So, there's definitely some good trades to be had here. As you can see, consolidating, chopping up and down, up and down, up and down. I wouldn't be surprised. I didn't see it at the time, but I wouldn't be surprised if this wick is the same time we saw that news come out, got smacked down, and as you can see, it's really just sort of consolidating around here. So, this kind of thing. This is obviously quite a strong area for support. I think any dips down over here are just going to be bought back up. So let's actually make this wick over here. Move this one back over here so we can see that. So look, I think certainly it's going to be a tough trade through here. We're right in the middle. I think just really if you get up to the top over here, sell it down. I think if you get to the bottom over here, whoops, buy it up. I think that's the best you can kind of hope for at the moment. That's the way that I'm sort of looking at things. I don't see this sort of, as I said, keep saying, I don't see a V-shape recovering. And finally, tick along. So we've got China, and this thing is again all over the shop. Wow. Is this move here? Yeah, that's the headline news. Yep, they're gonna fix it up. No, they're not. Bang, boom, 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 and that's where we're at the moment. So this is actually in a very kind of coming into a very crucial area here because we know that the PBOC previously has used this big red zone up here, sort of between sort of 735 and 737 or so, to intervene. And they've sort of said that, hey, you know what, we're not going to do it this time. Well, they previously had said they're not going to use that kind of sort of approach this time to try and sort of combat any sort of potential tariffs. So the unpacking of this situation at the moment is that obviously, they had tariffs on there. America's come out, slapped them with tariffs. They've clapped back and said, hey, look, so tariffs came out here. No response. No, I think their response actually probably came in. Maybe, yeah, I think this move here was them sort of saying, hey, you know what? Well, we're going to shoot 34% back at you. So retaliate. Come all through here. America's just said, hey, look, nah, you don't retaliate, mate. You just take it on the chin. I think they've given them like 1 day. I think they've given them till today, America time, of course, the 8th, to withdraw that sort of threat, or whatever you want to call it. And I don't think that's going to happen. So I think we could potentially see this thing move up and test these levels over here. This is a very managed currency, like as in it's controlled. That's why it grinds a lot and grinds a lot. If this thing does go above here, we could see quite a substantial move, I think, because that means that they're not stepping in front of it to hold the yuan at a decent level. So I think that, yeah, any sort of move up above this level could see quite a fast move up there. So I think really got to wait to sort of see what they sort of say about the sort of tariff sort of situation. See if they can say, hey, look, we're going to have a discussion. We see a discussion, moves down. We see sort of a screw you, we're not going to do anything, don't tell us what to do kind of response. I think it's going to move up. And I think any sort of move up there will obviously sort of damage Aussie a little bit. And I think sort of potentially we could see some flow on of that into gold. But as I was saying before, I still think gold is going a bit lower. I think that these sort of things going on at the moment are keeping it elevated. But as to how long that'll sort of last, not quite sure. Actually seeing Aussie take off a little bit here. Aussie up to, I just put in 10%. So could see a move up here. So I don't know, see what happens at 28. I'm not going to chase this one. All right. Anyway, so yeah, that's the charts there. Of course, we've got no data on this thing here. No, there we go, reloaded. So coming through the session today, we got consumer sentiment. I imagine this to be quite smoked. As to how much the market moves or reacts to it, we'll sort of we'll wait and see. Confidence here, again, I probably expect these to come in a little bit lower. These both just sort of weigh on Aussie. So maybe you move up to 28, you get this data out in 20 minutes here and then an hour and 20 here. If these things happen and they come in negatives or weaker, then, you know, bang, Aussie maybe sells down a little bit. There's a big talk, actually, I should say as well, with Aussie at the moment about, you know, emergency rate cuts and going to do 50 base point. In my opinion, don't hang too much on that. The more you hear it, the more the market may sort of potentially position for that, more it's going to be open for basically letting itself down. And we might sort of see, you know, something happen where, you know, everybody's expecting this 50 base point cut. You get a 25 base point cut and it springs back the other way. Because supposedly everybody thinks that we're going to be getting this 50 base point cut. So yeah, I wouldn't buy into this kind of stuff. There was a point last year actually when I can't remember what data came out. Maybe it was a week NFP, and they were talking about potentially like 50 base point cuts or no emergency cuts for the Fed in between meetings, and that was just absolutely laughed off and shit. So yeah, it's pretty stupid. Anyway, moving on. Look, there's not a great deal of data sort of coming out at the moment. Certainly nothing through Asia, Europe, nothing too much. Nothing super major of note, even through US. So we just sort of see how the price action dictates stuff through there. We've seen 25 base point cut from New Zealand tomorrow. That's fine. We deal with that there. I don't imagine that to sort of really react too much to stuff. And then cruising along. So we've got Fed minutes Thursday morning. It's not really too much till Thursday. CPI on Thursday looking to come down for the US. That could be something that, look, if we see it move up and that comes in lower, that'll see the US dollar sort of sell off a little bit there as well. But yeah, certainly not too much on the news front through today. So just going to be keeping a bit of a eyes out for those headlines coming whenever they pop off. All right, that's it from me.